Welcome back, YouTube. So I have been receiving a lot of questions and comments and stuff about the price of Dogecoin and crypto having its recent sell-offs. And I wanted to address this, even just kind of like on a macro level when you're looking at multiple cryptos, not even one specific, but you can use something like a Doge, Ethereum, Bitcoin. Really the market cap in this scenario doesn't matter as much. But when you have these types of sell-offs or you see panic or fear in the market, the old proverb as far as for buying when people are fearful, selling when they're greedy, it really comes into play. But I want you to think about the last bull run, or really just any bull runs. And what comes to mind is when you have these sell-offs and these coins and stuff, and they hit these pivot points. Doge being in the 5 to 6 range, Bitcoin hitting 25K, and even if they have like that crash down to some of their lows, like on this cycle at least, Bitcoin going to like a 15, 16K, a Doge having a flash crash down to like 4 cent, and you have these sell-offs here, and I don't look at those as times of panic. I think that people underestimate the fact that these coins have realized much higher than where they are now, and historically each cycle they trend higher on the bull run. And so when you have, I hate to use the word like guaranteed and stuff like that, but I'll just say it's easier to make 100% return, 200% return when you see assets that are have declined 80, 90% from their all-time high. It's easy, much easier to see multiples of return when you're buying Bitcoin at 15K. It's easier money when you're buying Dogecoin at 5 cents, 6 cents, and stuff like that, versus waiting on a spike or Elon announcement and you're buying it at 12 cents. The people that are buying right now on the next, it doesn't have to be a major run, on the next leg up at 12 cents, not even at the major pivotal point of resistance of around that 15 to 20 mark, just where that first one comes in, they're already up 100%. And this is kind of like thinking that I think a lot of investors kind of need to tweak their thoughts versus when they're having these sell-offs and stuff, versus the first thing that comes to mind is to panic or is there something wrong, or is it going to go lower and stuff like that. And trying to time the bottom, unless you have not invested a significant amount of money already, or you're planning to put in an absolute large amount that's going to overall bring down your DCA, then it's not going to make that big of a difference if you're buying Dogecoin at 5 cents or 6 cents or Bitcoin at 25,000, unless that's going to affect your overall DCA. The fact of the matter is, buying it at 5 cents or 6 cents, that 1 penny is not going to make that big of a difference in your portfolio unless you're investing an absolute large amount. Same thing with Bitcoin. I think the best thing you kind of need to do is look at it within zones. So if I would attack this, and this is kind of what I've done even in stocks as well, is if I'm looking at an asset, I'll have my buy zone, which is where my normal average is, which is, even with Dogecoin, it's around like 5 cents. So even because I bought so many, even if I buy now at around 6 cents, it's not necessarily going to move my average up a lot, but I'm not buying at 10 cent or 12 cent and stuff like that. When you see these spikes and stuff like that, I'm saying, hey, I'd rather have it down here where this has on the next run, it's going to be relatively easy to see multiples of that, and I'll be deep in the green and I'll have more options. Same thing with something like a Bitcoin. Instead of saying, oh, is it going to go back to 16,000 or whatever, 25 is a great deal. We're looking at 100K on the next run. Even if it just goes back to its previous high, you already are going to see 100% plus return. So this makes the investment relatively, I'm not going to say guaranteed, but it makes it an easy decision to make. So this is kind of how I look at things. And when I look at the different like investments or trying to decide whether or not I should try to jump in right now. And I think that a lot of people, if they take that approach, they will sleep better at night versus trying to time out those little differences and stuff like that. We talked about the government coming after crypto, trying to attack and deviate people away from crypto so that they can takeover and stuff like with FedCoin. All that kind of stuff is coming. But when we have the diversification and we have the popularity and stuff of these coins, you're going to be able to trade and have that option outside of the standards. It's kind of like what we have now. You have the dollar that's dominated and stuff like that, and they know that on an international basis and from the people that they're never going to get everybody to turn in all their gold. They tried that during the Great Depression and stuff like that. So what they tried to do, what they really did, which was staple a certain dollar amount to trade in if you want to convert your gold to the preferred currency, which is the US dollar. So even though an ounce of gold, let's just say it's $1,000 plus, which it is, it's based off of the weight. They're going to say, hey, if you want to turn in this gold coin, it's going to be $50. So, and this is kind of something that you kind of have to do here, even though you can still trade it at its metal weight. I think this is kind of going to be like a system that we're going to have here that's going to create a parallel between what gold and the dollar is compared to what, Bitcoin or Dogecoin, whatever cryptos and stuff we're using compared to the Fed coin. They'll probably have their set conversion rate, and then we'll have the conversion rate that everybody else is kind of using. I think that can kind of create an avenue or space that can allow trading amongst ourselves based off of the actual rate. But of course, the government is going to say, hey, look, we want to create a parallel here so that it's not, necessarily showing inflation and how weak our crypto or our currency is, because that's one of the things that people were comparing the price of gold to. Because if you don't have that staple on there, it's going to look really bad when the amount of dollars it takes to buy the same amount of gold is going up, the whole price versus value equation. And they certainly don't want to show that up on crypto as well. So you can best believe that they're going to have some type of system to kind of create those parallels and kind of keep things in a box here so that they can still dominate and kind of force businesses, and I'm not going to say force, but encourage businesses to use FedNow or whatever crypto they come out with versus alternatives. So, but I do believe that we'll still have that option to kind of trade amongst each other and do business and stuff like that. And even businesses as well, they have the ability to accept it. But I think that's kind of going to be the strategy that they use. So just kind of keep in mind that. And also, I want to address this last point in this video. People are, when you look at the conversion rate or even the prices, don't forget, you're still comparing your crypto. And I'm not telling you how to play the coin, but you're still comparing your crypto as a conversion back into dollars. I think people are still thinking that this is going to be similar to 2020, 2015 and stuff like that. We are moving very fast toward a digital currency society and stuff like that. So just kind of keep that in mind. Don't always think about converting it back to dollars and stuff like that. Think about purchasing power and preserving that in crypto or in digital assets, because especially as they develop that Fed coin and stuff like that, you're going to want to have diversification and not necessarily think about converting it back to dollars. So I would say just kind of consider the option of holding X amount of your portfolio and stuff like that inside of crypto. Again, not financial advice, just something to think about. Anyway, let me know your thoughts as far as for the price ranges, the strategy as far as for what the Feds are going to use to convert and trade dollars, and even holding some of your portfolio and stuff like that in crypto. Let me know your thoughts. I appreciate all of you. Thank you, and I will see you guys in the next update.